I used to have several sites. Now I kind of like the grower's edge. It gives me that cash max. You can tell it which markets you're looking for, and it will tell you what your highest net back is based on the price they're paying at that time and the basis that they're paying. And that's pretty handy because I don't have to go to so many different sites.
Good afternoon, welcome to GrainTV. It's October 10th, 2014, a USDA report day. To my right here is Cody Bills. Let's jump into the iPad here and see where we closed, Cody. We had corn down 9 3/4. We had soybeans leading the way lower, down 20 cents, and we had Chicago wheat showing a little bit of relative strength there, up 5 1/4. Well, you can see from this chart here, we're looking at soybeans on the left axis, corn on the right. The yellow line is when the report came out, and you can see that both corn and soybeans had a positive initial reaction to the numbers, but as you can see, sold off quite substantially into the close. Both markets closing down significantly on the day. Cody, let's kind of go over the numbers from the USDA. Why did we see that pop? But long term, are traders still concerned about prices?
Well, first of all, yeah, let's go through the numbers right here. When you look at yield, you'll notice we came in, for the most part, on par with analyst expectations. Really only half a bushel per acre lower than what the average analyst guessed was. Production-wise, you know, again, when you have that sort of kind of accuracy when it comes to the bushels per acre, you know, the production is right in there. But ending stocks did come in a little bit shy, but we're still well over 2 billion here, 2.081 billion bushels of ending stocks. That's very significant, although it was 49 million bushels below where the analysts were expecting. The bottom line here is, I think that that some of that bullish rally, some of that short covering that we saw going throughout this week, I think a lot of traders were looking for maybe the USDA to be less aggressive as the analyst expectations. Right. And with that being said, perhaps continue this bullish rally. Well, they came out, I think, not enough to shock the market into a continuation of this buying that we saw over the last week. And for that reason, I wouldn't be surprised if we continue to see some of this selling pressure that we've been experiencing over the last couple months start up again here next week.
Yeah, you know, soybeans really seems like a similar situation to corn as well. If you take a look at this table here, you know, very similarly to corn, we had yield come out about half a bushel short of what traders were expecting, reported today at 47.1 bushels per acre. Production really right in line with trade expectations at 3.97 billion there. The only surprise, though, that we really saw was the ending stock number. It came out at 450 million bushels. The trade was looking for a relatively unchanged ending stock number. Now, we did have the reduction in bushels as a result of the September 1st quarterly grain stocks. That could have been playing into this carryout number for 2014-15. But as you said, Cody, this report for soybeans, as it did with corn, really seemed to be a confirmation of large yield expectations, of large production. It really wasn't the short report that some bulls were looking for today that were going to help this market continue to move higher, as we've seen it move really throughout this week leading up to report.
Absolutely. And when you look at this market here, I think the one thing that could possibly continue some of this short covering is the weather.
Right.
And when you look at the weather, you know, it's awfully wet out there. We're behind the harvest pace that we expected even on Monday's crop progress report.
Right.
We're behind the 5-year average. What are we expecting here in the week to come, and do you think that could provide a little bit of support here for the market?
You know, it's possible that it could. If you look at this map here provided by Planalytics, you can see that between the 9th and the 15th of October, really significant rain events are expected here across the southern grain belt. But if you look at Iowa, Wisconsin, Minnesota, North Dakota, really should be relatively dry. Expecting some good progress to be made there in terms of harvest pace. So I guess that's a story that I think is going to get some attention next week. Is it the kind of story that I would be holding off pricing some soybeans on, Sunday night, Monday? Absolutely not. But it is a chance that it could get some interest to get on the long side. Long term, though, I don't think it's going to have major bearing here on corn or soybean prices as we move forward. Now we know, Cody, looking at the cash market, we did see a little bit of strength here this week as a result of some slow harvest pace for corn and soybeans. Kind of break down what are we looking at right now for the cash market? How is this market responding to kind of the pace of harvest here?
Sure. You know, when, like you were saying, we do have a little bit of delays, and of course that is affecting the cash market. One of the ways that it's affecting the cash market is it is increasing the bids here for soybeans along the river. We saw soybean basis at river terminals along the river on average up 26 and 26.25 cents here this week. And part of the reason for that is the fact that we did see barge rates decline here, but we have a pretty significant amount of grain, particularly soybeans, that we need to be moving out of the country down at the Gulf. And I think part of the reason that we saw that strong, that's part of the reason why we saw that strong CIF bid, and that really helped prop up soybean basis along the river. Corn, on the other hand, as barge rates declined, so did the CIF bid, and really we didn't see corn make any sort of significant gains along the river. Basis was for the most part unchanged. But on average across the U.S., we did see corn down 1.25 cents across the country. Soybean basis improved 3.5 cents across the U.S.
Yeah, soybean change in particular is quite a difference from what we've really been used to seeing here. For about the last month here, we've really seen a dramatic collapse in spot soybean prices as the very tight old crop and the very large new crop converge here. The bleeding seems to have stopped there for the spot soybean market, but here at Grain Hedge we have a great tool that can help you analyze both your local cash market and the composition of the cash market really across the United States. It's used by a lot of grain merchants as well as producers to find premium selling opportunities or basis trading opportunities, and the information that Cody explained here is taken directly from that platform. If you'd like to take a look at it for yourself, you can visit us at grainhedge.com or you can call our office. The number is 877-472-4607. Thanks a lot for joining us here on a Friday for the October USDA report. Have a great weekend. We'll see you back here on Monday.